Vanakkam, Namaste, Namaskar. Welcome back to Jal Prayag again. I'm going to continue on the topic of marine insurance, which I had done one module last week. So I had talked about a few basics. Today I'm going to do part 2 of marine insurance, where I'm going to talk about a few principles. So I'll try to keep it brief because if you look at the fact, marine insurance or any insurance is not a topic which everyone says, I like it. No, it is not. So it is a topic where a lot of legal words are used, a lot of ifs, lot of buts, lot of unless. So the terms, when you look at the actual law, or whenever you say act or something, it's slightly confusing for the majority of the people. And last video itself, I told you the major bargaining or making the contract of insurance, everything is done in the background team, which is your owners, your charterers, and all those people sitting in the office. So as far as a sailing mariner is concerned, I'm not directly involved in all this nitty-gritty. But you're supposed to know, because uh, liability can come from you also as a mariner, as an employee, as a master, crew, or officers. So you are supposed to know all these things, if not in quite deep detail, but at least the principles you are supposed to know. So that is how I'm going to make this simple. I'll try to make it crisp and easy to understand also. There's one more thing I want to tell before I start off. Those people who are coming new and joining, if you look at my channel, there is a playlist. I'm trying to organize all the videos as different subjects in the playlist, because the numbers are slowly increasing, and you might miss some videos when you look at numbers, because it is divided into popular or most viewed, only those categories. So whenever you come to the channel, please try to go to the playlist and see if you can find the subject in which you are interested. It'll be easy for you to search also. And at the same time, it becomes more organized. Otherwise, I know there are a lot of channels which have more than 100 videos. And if they are not arranged in a playlist, it's very difficult for you to find whether the subject interest is there in those videos or not. So I'm trying to make it a little bit organized. And again, this came as a feedback from one of my students and the viewers. Thanks for him. Thanks to him. Please keep giving these kind of comments. That will help me to make my channel even better. So let us start off. So I'm titling this as Marine Insurance Part 2. So the main topic is the principles. So let us quickly look into this. Before I go into the principles, I'll just give you a small brief about the whole market, how things are there. It's very brief and simple. Some of the oldest players, if you ask me, in the marine insurance markets are more related to UK. The modern navigation, the modern this one UK is quite involved, and there are a lot of things that started from UK in the modern navigations and modern marine principles, and the same way was the insurance also. So one of the most popular one is your Lloyd's. But what is Lloyd's? Lloyd's is nothing but is a society of individuals. There are many wealthy individuals who provide capital for Lloyd's, and that is how it works. The second popular one is your ILU, or Institute of London Underwriters, which is also called as companies market. This is an association of underwriting companies. I'll quickly come on later slides what do you mean by underwriter. So it is an association. Then the third major contributor for insurance is P&I clubs, which is more of ship owners and ship managers group. I have talked a little bit more on P&I clubs in the last video, so I'm not going to go there. I'm going to talk about the main insurance, which is talking about your hull and machinery, so H&M. That is where I'm going to talk about these principles. Our Indian companies are also picking up the market. We have some big players. So a lot of Indian ships go with this United India Insurance Company. There is something called New India Company also. Not only them, we have some private players as well. The majors are Tata, Royal Sundaram, ICICI, HDFC, and there are more actually. So I've just named a few just to tell you that Indian ships do get covers from Indian companies also. So before we go, I'm going to quickly talk about two terms. Let us see what is it. What do you mean by underwriters? This word keeps coming in every insurance topic. So they are actually individuals who assess the risk, okay? Because you go to them and they assess the risk. And based on the risk they are ready to take, they charge the premium. So this is what is the job of underwriter. Then who is a broker? Broker is a link between you, the customer, and the insurance company. So general public and the insurance company. So they will approach you or you will approach the brokers. They will advise on the policies, what are the possible premiums and all plus and minus, and they will suggest something. And with whatever your demand is, they will go to the underwriters. Now, you realize one thing. A broker cannot go and get the full cover of your property or the risk by a single insurance company. He may not get it. He may get it. He may not get it. So what does he do? This is where a concept of slip comes. Slip is nothing but a note where he notes down all the risks you want to get it covered. Then he keeps on going to different insurers so that he can cover the 100% risk. So this is how the normal broking happens and the insurance happens. Now, there are two types of insurance policies which are for your marine market. All of you have heard about it. It's called time policy and voyage policy. I'm not going to talk about time policy and voyage policy right now. I'll try to talk maybe in the third part of insurance. Let us go to the principles, because this is important for you to understand what do you mean by those principles with a few examples also. So the three major principles are indemnity, insurable interest, and utmost good faith. These are the three. There are some sub-principles. I will talk about that. There is some concept also further to it. So I'll be talking about mainly this in this particular video. So let us talk about indemnity. Let us see what is indemnity. Marine insurance is basically a contract where the insurer, that means the insurance company, is going to indemnify the assured. How? It is based on the manner and extent you both have agreed. So the customer and the insurance company, how they have agreed, that is the manner he is going to indemnify. So what do you mean by indemnify? Indemnify in marine insurance, or generally in any insurance, if you ask me, is called compensation, which means that I'm not going to replace the subject matter which has been lost or damaged. I'm not going to replace. I'm going to just give you financial payment. Let us take a quick example of day-to-day life. Let us say you have a car, you insured it. There was an accident and the car got damaged. He's not going to come and replace the damaged part, or he's not going to give you a new car. He's just going to compensate with money, and with that money, you will do the replacement. So that is how it works. And we do this replacement in a service center. So service center will always be in touch with your insurance company. Let us say you have damaged your bonnet. So he will say, okay, I'll replace your bonnet and I'm going to claim the money from the insurance company. So how much have you agreed? Have you agreed for 100% of the bonnet or 80% of the money of the bonnet? So that much money will be taken from insurance company, and the remaining 20% you will have to pay. And the service center replaces the bonnet for you, and you are back to normal. So this is the principle of indemnity. Okay. As always, even for a vehicle or a ship, always when you make the contract, that means the commencement of the risk, a value is put to the ship and the cargo, whichever is being insured. There's a value put to it. Okay. So the insurers will determine what is the measure of indemnity based on this value. Let us say your house is costing you 50 lakhs. They will put a value to that at the beginning of the contract, and they will tell you that, okay, I'm going to pay you 75% of this value. So that is how it works. Well, if you want 100%, then they will charge you more premium. So it's simple as that. Money, it's all about money. So you need to understand the market value of the subject might be different from the actual value. So we always look at the value which has been agreed upon at the commencement of the risk. Actual value might be different. So that is not important. It is the value you have agreed upon. There are two sub-principles of indemnity. They are quite important because it affects everyday life also. I can give you a small example. First one is called contribution, which means that assured, that is me, the client, cannot go and claim more than once for the same risk. So what do you mean by more than once? I'll give you a small example. Let us say I take two policies on the same risk. For example, I'm buying a car, I'm insuring the same car for the same value, let us say 15, let us say 10 lakhs, from two different insurance companies. Now, there is a damage, let us say you have completely lost the car. You cannot go to both the companies and tell that give me 10 lakhs here, give me 10 lakhs, and you become 20 lakhs. No, the total value still which will come to you will be only 10 lakhs. So how is it done? It is done by pro rata. This pro rata or the split will be done between the two insurance companies. So that is what is the meaning of contribution. Okay, it's very important. Then there is one more sub-principle which is called subrogation. Here again, the assured, that is me, I cannot claim again from some other party after my insurers have settled my claim. So I'll give you a small example. Let us say the cargo owner lost his cargo for some reason. So the insurer paid the cargo owner whatever was his due, he just paid it. Now this cargo owner cannot come to the ship owner and again ask for the same loss, telling that you also pay me. So this is also not possible. That is why it is called subrogation, which means that insurer subrogates or takes over the right. The moment insurer has paid to the cargo owner, he takes over the right. Now you cargo owner cannot go and claim again. Rest of them will be dealt with the insurer and the ship owner in their own way, but you cannot go and claim again, which is called subrogation. Let us look at the second one, which is called insurable interest. I'm sorry, there's a small spelling mistake here. Insurable interest. The marine insurance contract, it clearly says that the assured, that is me, I should have an interest in that property at risk, which also means that if by chance there is a damage to that particular property for which you want insurance, I stand to lose something. I stand to lose material, I stand to lose money. So I should stand to lose with the damage of that particular subject matter. Or I can incur a liability also because of that particular damage. I'll just give you a couple of examples that will make it clear. Either I should stand to lose monetarily or I should incur a liability because I've lost something, okay, from some other person. Let us say if the cargo does not arrive in time. Let us say if the cargo does not arrive in time, then I incur a liability. So that means I have an insurable interest in the cargo reaching in time. So think about it in this way. I'll give you examples. Let us say there's a person A. I cannot go and take a policy of someone else, person B's car, and tell that if that man loses his car, I will get my money. No, it is not possible. You don't own that. Okay. A has got no insurable interest in B's property. Let me give you one more example. A ship owner has insurable interest in the goods he loads because if there is a damage, he has a liability to the cargo owner. Even though the cargo is not his, he still has insurable interest. Essentially, you must satisfy 2 points. Number one is the subject insured, whatever the subject insured, should be physical and it should be exposed to the peril which you are insuring. Second, I should have a legal relationship to that particular subject. That is what was A's car, going and making insurance of B's car, which has got no relation. So I should have a legal relation to that subject also. So this is what is your insurable interest. Let's talk about the third one, which is your utmost good faith. Again, this contract is based on something called utmost good faith by both the parties, which means that I should disclose everything which is sometimes or the other during this contract can affect the insurer, because of which he could have judged the premium. He could have judged that whether I should take the cover or I should agree to take the cover or no. I'll give you a very good example. I think this is the best example. Let us say I want to go and take a life insurance policy. So let us say on death that somebody is going to get compensated. I know that I have a heart problem. But what I do is I do not disclose this and I go and take a insurance. Now this clearly says that I've broken the utmost good faith. And if this happens, I've written in the last sentence, if the assured fails to disclose, let us say the insurance company finds out that I had a problem with my heart and I was going and doing some medication. I never disclosed it to the insurance company, but I took an insurance of 1 crore, let us say. Then the insurer can avoid the contract. Why? Because you have not stuck to the principle of utmost good faith. I think this is one of the best examples you can understand in utmost good faith. There is one more concept in these principles. It is called doctrine of proximity cause. The word proximity means it is, I'm going to give that meaning also, the proximity. Let me just give you the meaning of that more on a legal terms rather than explaining on words. Now, this insurer, the insurance company is liable for a loss which has been caused by a peril and it was proximately caused by the peril. The peril could be fire, damage, or anything, whatever you want to call it. The fire is a good peril. So it should have been proximately caused by that peril. And then the insurer is liable. Let us quickly look at the meaning of proximity cause. Proximity cause means it is the most dominant and effective cause which has caused the or which has led to the damage. It may not be the nearest cause. So this is something very important. That is why I did not explain it in my own words. I thought I'll stick on to this legal words. It is the dominant and effective cause, and it need not be the nearest cause of that accident or loss. Okay. There is one very important feature in this. The insurer is not liable for loss caused by willful misconduct of assured. I'm going to tell you what is willful misconduct. But there's a small catch here. He says, unless otherwise stated. So normally, as an insurer, I'm not liable for any willful misconduct by my crew or officers. Okay. But if I say unless otherwise stated, that means I can add a rider and agree to the insurance company with the owner and the insurance company. If I put a rider as a ship owner, then the insurer is liable for the loss. Let us say it was caused by willful misconduct, but that willful misconduct was a peril which was proximately caused in that damage. So it is possible. See, whenever there's a rider in any insurance, again, it is all about money. It's very obvious that I'm going to charge you more and then I will take that risk. So willful misconduct normally is not liable, but I can use a rider. There are a couple of riders here also. I'm going to just add. Please look at this rider. Unless the policy otherwise states. That means if I have not taken a rider, insurer is not liable for damage by any rats or vermins as a proximity cost. Okay. If I want, then I should take a rider. Similarly, ordinary wear and tear, no, unless otherwise I have taken a rider. Now, one more thing is delay. Let us say I'm liable because of delay. Unless I take a rider, please remember, delay will not be compensated for you as a proximity cost. Now, let us look at what is this very important word called willful misconduct, and there's one more word called negligence. I have a reason to bring these two. Why? Because in my next video, I'll be talking about negligence. So let us quickly see what is willful misconduct. I can very, in simple words, say it was intentional and deliberate. So that is what is willful misconduct. But negligence is not intentional. It could be because you were not careful enough. So there's a big difference between negligence and willful misconduct. I'll be talking about negligence later on, maybe in the third video. Why? Because it comes as a part of a peril, actually. So we'll talk about perils later on. That comes to the last slide. So we are done with this particular module. I hope it was simple enough to understand those basic principles and sub-principles of your marine insurance contract. As again, I repeat, insurance is not everybody's cup of tea. Not everyone likes. A lot of legal jargons are there. A lot of ifs and buts and unless are there. So it takes a little bit study and research and discussion with some experienced people. I've tried to be as simple and as correct as possible, but feel free to comment on anything, any suggestions. And if there is any mistake in any of my video also, you are welcome to point that out and I'll be more than happy to correct that. Don't bother about that. Please don't hesitate to give a feedback in case something is wrong or contrary to whatever you think. Okay. Hoping this was good enough. I'll catch you soon. Vanakkam, namaste, namaskar. Maybe with one more marine insurance video, or sometimes I might always deviate. So until then, keep watching Jal Prayag. Catch you later.